Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Friday, May 24th, 5:42 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. Market state, we're in an uptrend as of May 6th. Check the trend gauge over here. Market leaders, green arrow, just what we want to see. Big comeback today by market leadership after some weakness yesterday on the reversal after NVIDIA's earnings was announced. We'll talk about that as we get into the video. We also monitor the 5 major indexes across 3 time frames to determine our exposure to the market. Mid caps and small caps broke below the 21-day exponential moving average yesterday. That's our short-term indicator, but regained it today. The Dow, however, unable to. That's the only weakness that we're seeing across the indexes, as all 5 are trending above the medium-term 50-day moving average and long-term 200-day moving average. So what happened today? In the title of the email, I asked the question last night, is it time to sell after the harsh negative reversal yesterday? And if I was looking to leading stocks for an answer, I got it. And that would be an emphatic no, as really what we were expecting yesterday with the gap up in NVIDIA to trickle over to the rest of the market was delayed by a day. The market will seek to fool the masses at all times and separate you from your stock. We sold a couple of things yesterday, put a hedge on. Soon as we realized that we were not, in fact, going to break down lower, we took the hedge off in pieces today, added a little bit more exposure. And if you look at the 21 over 21 list, this is our official leading list we publish every week. All 21 stocks up today. This is exactly what we want to see. The average gain, 2.90%. So the headline is Leaders Propel indexes to broad gains. Obviously, the exception being the Dow. But that's okay because the Dow is a defensive index in market leadership. We don't pay as much attention to it. I'm sorry, in strong uptrends, we don't pay as much attention to it as it's a defensive index. So here are the rest of the numbers. The big 8 up an average of 1.65%. Good to see big tech leading. The RG8, this is our 8 growth ETF composite. This is how we keep our finger on the pulse of growth stocks, up 1.31%. The S&P 500 up 0.70%. Basically repairing the breakdown below the key level yesterday that I showed on a 15-minute chart, and I'll bring that chart back up again today and explain that. Equal weighted S&P basically in line with that. NASDAQ 100 up 0.95%, equal weighted up 0.7. The Dow just barely positive. Some of the high price stocks just lagging there. That's one of the problems when you are a price weighted index, as the Dow is. Sure hope they put NVIDIA in there after NVIDIA splits. You can't put $1,000 stock into the Dow because it being price weighted, it will just be like an elephant jumping in the bathtub, just dominating the daily action. But with a more reasonably priced stock with the split that NVIDIA has coming up, it should fit right in. And frankly, I don't know why they don't have stocks such as Amazon in there. Moving on, mid caps up 0.84%. Russell 2000 small caps up shortly a little bit over 1%. Global diversified 60/40 stock and bond up 0.43%. Our flagship GROTECTION portfolio up a very nice 1.52%. Leading stocks leading the way there. We'll review all the charts of everything that we own and take a look at what we're focusing on for next week. So here's a chart of the S&P 500. Some of the negatives yesterday, obviously the new highs with the gap up and then breaking below the lows of that recent consolidation, and this purple line, that's our ultra short-term 8-day exponential moving average. One of the things I said yesterday that bulls wanted to see immediately was us getting back above that 8-day exponential moving average, and we did that. Now let me go to that 15-minute chart that I drew yesterday. And here was the gap up on CPI. And then that kicked off a 5-day consolidation with 52.83 on the bottom and 53.25 on the top. There's the 53.41 open and gap up after NVIDIA's earnings report. This was Thursday. And there's the miserable failure to the downside, including breaking below that 52.83 level and causing us to get a bit more defensive as it was an expectation breaker on the breakout. But with the repair action of today, we're going from a failed breakout to a failed breakdown. And as long as we stay back above this 52.80 level, which we gapped above today, tested it early, got some positive news from the University of Michigan consumer sentiment data, and that launched a rally to the upside. We pulled back some in the afternoon, but we're back inside this range. So this now makes this a 7-day consolidation. And next week, we'll be looking for support down to this 52.80 level. At the worst, 52.57, which is the low of the shakeout day on Thursday. And to the upside for bulls, we want to see a breakout above this 53.25 level and stay above it. Recall yesterday I talked about how we failed trying to get back above it Thursday afternoon after the initial breakdown. That led to the making of lower lows and breaking below that support area in this 5-day consolidation. But today went a long way on the index to repairing it. And if you look at the action of leading stocks, you get even more bullish because hey, 21 out of 21 being up, it really can't get better than that. And we'll take a look at those charts momentarily. So there's the S&P 500, the NASDAQ 100, never broke the 8-day moving average and in fact closed at an all-time high. Note the relative strength. We've been pointing this out for the last 4 or 5 weeks after relative weakness led to the correction that we had during April, but higher highs repairing that. Dow Jones Industrial Average, here's the weak part. The 21-day moving average has now rolled over, and the Dow could not get back above that today. Again, mildly concerning. So it's a failure at the 40,000 level, and we're just barely above the 50-day moving average for the Dow now. But again, you can see how terrible the relative strength line is for that. Making new lows ahead of price is bearish. But again, we're not focused on the Dow. We're focused on leading stocks and leading sectors in the NASDAQ and S&P 500. Mid caps bounced at the 21-day moving average, or sorry, the 50-day moving average, and closed back above the 21-day moving average. Next week, we want this 50-day to certainly act as support and stay back above the green line, the 21-day, with an eye toward getting back toward new highs above that 3,000 level. The Russell 2000 small cap index, again, closed below the 21, bounced at the 50-day yesterday, but regained the 21-day yesterday. Same situation here. The lows of Thursday are pretty critical for any individual stock, as well as the mid cap and small cap index. And I drew the lines on the S&P that you want to monitor for next week as well. All right, those are the major indexes. Let's move on to the VIX. Spike up yesterday, move back down today, along with the strength in the index. Back below this 12 level, that implies a decrease in volatility, and that is a bullish statement that the market is seeing there. USDR, the US dollar, bulls got help for this today as it pulled back 0.34%, back below this declining 21-day moving average. You can see arguably that this is a bear flag that is setting up on the dollar. And if the dollar breaks lower, that is a bullish occurrence for stocks. That's something we'll be keeping an eye on. How did this impact precious metals? Gold closed at the low of the range of the day and below this 21-day moving average. So that's a negative there, just barely positive on the day. Gold stocks, GDX, a nice up day, up 1.5%, and reclaiming the 21-day moving average, but closing near the lows of the range on the day. But hey, we'll take the gain, absolutely. Moving on to silver. Silver up 0.7, holding this breakout that it recently had. How about Bitcoin? IBIT regaining most of yesterday's losses, firmly above the 8 and the 21-day moving average, and setting up in a very nice flat base, looking to break above that and moving to all-time highs. All right, on to bonds, the broad bond index, tight range on bonds today. The broad bond index just barely up. That implies that broadly rates were lower. Just by a bit, though. TLT up 0.30%. You know, if bond prices are up, that means the yields are down. Here's yield on the 30-year, lower. Again, failing at this 21-day moving average. That's good for bulls. And TNX, the 10-year yield, also finding resistance at this declining 21-day moving average. And that's good for bulls as well. All right, the tail of the tape, you can pause this. I'll hit the highlights. 10 a.m., University of Michigan consumer data came out, and the reaction was positive as the outlook on inflation and general expectations were what the market wanted to see. And we broke out of a 30-minute trading range and went higher after that data came out. This is how the consumer look, because the consumer is such a big part of the economy. The consumer outlook is very important to pay attention to. So day count back to from day one back to a consolidation of 7 days. First day back above the 8-day exponential moving average, 15 days above the 21-day moving average. Sectors, 10 out of 11 spider sectors positive. Semiconductors and solars led the way on indexes to the downside. IGV, that's software, and biotech, dollar weak as well. So the portfolio, yesterday we put that hedge on I mentioned with no further breakdown. We took that off and added to our PDD and NVIDIA holdings, taking our adjusted beta back up from 1.09 to 1.37. Bottom line on the day, leaders flex their muscle. NASDAQ 100 closes at all-time highs. Mid and small caps regain the 21. However, the Dow is lagging with 2 closes below the 21. Let's get to some charts now. And we'll go with the 21 over 21 list. There's actually 24 stocks in here as things that we either buy during the week or really get our attention. We want to make sure we have in this list. Start off with solars. We're going to go from weakest to strongest, and everything being positive, that's okay. We got stopped out of oils earlier in the week. No big deal there, a paper cut. Financials, we got stopped out of this with the break below the 21 yesterday. It was up on the day, but relative strength is lagging on financials. So both of those will come off the list for next week. FCX hanging right around this 21-day moving average, unable to reclaim the gap down that it had on Wednesday. Goldman Sachs consolidating for about a week and a half now. American Express regaining the 21, but relative strength is weak. I'm quite confident I can find something better than this for next week's 21 over 21 leaders list. GDX, 3 days down, a weak bounce, but it did close above the 21-day moving average. Pure Storage, we own this back above that 60 level. We took some profits on it yesterday on the negative reversal, and they do have earnings next week. Nutanix, consolidating for about a week above the 8-day moving average. Anything that never broke the 8 is certainly displaying leadership after the shakeout yesterday. Transmedics continues to ride the 8 higher. Carrier Global, we stopped out of this yesterday, not showing much relative strength. This will probably get replaced over the weekend. CCJ, 3 days of a pullback, nice bounce today above the 21. Now remember, everything over here, we don't own Carrier anymore. We sold that. Everything that is green flagged is what we own in the portfolio. So we're getting into that part of the list for things that we own. Micron, staying above the 8-day. This has room to run if it breaks above this top and is putting in a little bit of a handle now. Again, it's in that key sector, which is data center, AI data center infrastructure. Spotify, nice close to the week, closing above that 300 level that's been acting as resistance. PDD, we added some back to this, gapped up, bit of a negative reversal, but really a good reaction overall to the days following its earnings report. Anytime you make higher highs on the second day after earnings, that's very bullish. So we added back some of our position on that. NVIDIA, the talk of the town, making higher highs today after a huge move up. And we added a little bit to this today as well. CrowdStrike, another good day, staying above the 8-day moving average. Howmet continues to act very well. We don't own this. So does Abercrombie and Fitch. We don't own this. Bitcoin, we do own. I already talked about the recovery there. APP regaining the 21. CEG, we own this, new highs, good stuff there, up 4.3%. VRT, new highs, up 4.9%. Kava, new highs, up 6.9%. And First Solar, trimmed our position because of how extended it was earlier in the week, continues higher on massive volume of 10.8%. So we still got a small position in this, but glad we hold on to it. That's why we always try to make the last sell of any position a defensive sell, because sometimes these things just take off to the upside and you just really don't know how high they're going to go. So that's a review of our 21 over 21 list and the portfolio. And with that, I'm going to wrap up this week's video. Great week for Revere clients. And if you're interested in more information, my email is don@revereasset.com. My partner, Dan Stewart, can be reached at dan@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. Our flagship portfolio is named GROTECTION because it serves a dual mandate, a dual purpose, and that is to grow assets during uptrends. And then, as they say, the trend is your friend until the bend at the end. Here's the bend. This is when we started getting more defensive. But when we got back above our key moving averages and leaders start acting well, we re-engage in the market, and this is the wave that we're currently riding. If it breaks levels, we'll get more defensive. If it continues higher, we'll ride the wave and look for low-risk entry points in leading stocks, in leading sectors. That's how we roll here at Revere. That's going to wrap it. Everybody have a wonderful long weekend. Remember the true meaning of Memorial Day. And for Friday, May 24th, the week ending Friday, May 24th, this is Don Vandenbord with Revere Asset Management. Remember, it's not how much you make in the market, it's how much of that you can keep. That's how we roll at Revere. Thanks for listening and have a great weekend.